Today we're looking at reversal candlestick patterns. A candlestick is a price displayed over a period of time. So here you can see we've got euro versus the dollar, and we're currently looking at a daily chart. So each one of these candles represents one day. With each candle you can see the open price, the close price, the high and the low of that period of time. So in this case it would be a day. As the name might suggest, reversal candlestick patterns are price indicators that show us when a market may change direction or reverse. These are primary indicators because they're based on the price. Unlike other indicators like RSI and MACD, which are derivatives of the price, candlesticks actually take it from the exact price. This means it can be one of your leading indicators to take a trade or use it as a trade setup. Before we identify candlestick patterns on the chart, I've drawn a few out so I can explain the mechanics of each reversal pattern. Here we've got 4 different types of candlestick patterns. So here you can see we've got a hanging man. So this is when a market would have been trending higher. So the market would have been going up here. Then you get this hanging man. So what this shows is that buyers push this market right up to this high, but sellers then pushed it the whole way back down and actually gained control during that period. A similar type of candlestick is the inverted hammer. Again, it comes from an uptrend. You can see sellers took control here. Buyers then did come in again, but this does signal a reversal. The opposite of a hanging man is a shooting star. So this is obviously when the market comes from a downtrend and then we're expecting it to come and trend higher. So the trigger or the confirmation that this shooting star, and the same for the hanging man, the same for the inverted hammer, and the same for the hammer, is when the high, in this instance the shooting star, is when the high is taken out. So this is the signal. When this candle closes, right, okay, this is a buy signal, but it's only a buy signal once this high is taken out. Likewise with the hanging man here, the signal is the close of the candle in this formation. The trigger is when this candle, the next corresponding candle, breaks a low. And exactly the same here. When this low is taken out by this candle, that's the trigger. Some more reversal candlestick formations include the bullish and bearish engulfing. So bullish engulfing is similar here. So the market's trending down. We then see an impulsive candle that closes very close to the highs and engulfs the whole of the previous candle. So once this bullish engulfing closes and it engulfs this whole candle, that's the buy signal. And vice versa with a bearish engulfing, it's exactly the same, but instead of at the bottom of a downtrend, it's at the top of an uptrend. And then finally, we've also got morning star. So this is similar to the shooting star. You can see up here, similar mechanics. We're coming up from an uptrend. It's then an indecision candle essentially. This is the candlestick pattern, and the low, once this low is taken out, that's then the trigger. Let's go back to the chart, see what we can find on the chart. One of the best ways to use reversal candlesticks is identifying the trend and going with the trend. If we look here, you can see we've got at the bottom here a downtrend, we've got a hammer. Yeah, you can see we've got a rejection down there, it's closed higher and then it's broken that high, and then we see this trend start to move higher. And you can see here we've kind of got 2 almost bearish engulfing candles here. So we've come up from an uptrend, we've then got these 2 which pretty much engulfs the whole of the body, and then obviously you've got this whopper here which engulfs the whole. Again, both signaling reversals, and we're seeing this market come off. Here's a great hammer, so you can see it's trending down. We then see this rejection, sellers tried to push this down, buyers come in, and then we start to see this market trend higher. As we previously mentioned, these are primary indicators, so you can use these on their own, but I would always look to use it in conjunction with multiple other indicators. So firstly, always trade with the trend, identify a buy zone, an area of support and resistance, and then use candlesticks to get into that trade. That's it for reversal candlesticks today, guys. Hope you enjoyed it, and I'll catch you next time.